So we back at it, we back at it for the win, people. What's going on? What's going on? All right, let me go ahead. What we got here today? We got life insurance. So basically, as you know, I talk about life insurance pretty much a lot on this channel. And the thing of it is, what is your intent with your life insurance? And for some, do you even have life insurance? Woo. So that's gonna be the big question. And let's go back into an effect where have the question being answered. Ask about your life insurance. A lot of people, to a degree, don't even have life insurance. More or less. My thing is this: if you're a father or a mother, especially a father, you should have life insurance because, for one, you're protecting your kids. Mother or father, you're especially as a man. We're looked upon to be the protectors and providers. And to have life insurance in the case, you're going to be a protector and a provider. Hit that like button coming in for the people that's coming in. I'm going to be real quick for the first couple of people dropping in. Then I'm going to continue with the message. Shout out to Alonzo, Indiana Jackson. What's going on? Indiana Jackson's over there from his T channel. What's going on with you? All right. So basically, just plain and simple. A lot of times we take things for granted, especially with life insurance. As a young kid growing up, my great grandmother always told me, you don't want to be a burden to people, so have life insurance. Whether it be term insurance, whole life, however you figure, just get something is better than nothing. So for most, you know, just taking the initial time just to go over the offers, see what you qualify for. And then, as time go on, you progress with knowledge and life, you know, you would pick a better option like the IUL, Index Universal. And that's the thing with most people, Index Universal probably would be the best option for you to pick, but it all, is accounted to pretty much how do you feel, what's your best option for the price range and for your money. Cool gamer, business connection, what's going on. And when it comes down to it, you literally have to, have an understanding like of your pocket. Like that's the biggest issue with most people with getting life insurance is getting the life insurance and keeping it. I can't tell you how many policies as a young man that I pretty much took for granted and let about two of them lapse to the point where I could have reestablished those, but I didn't. Young Riaz in the building. But when it came down to it, it was just me being young, naive, not really understanding what did I have. I would just think, well, I can get another policy, or well, I don't have the money to pay this policy. Why ask the family member and stuff? And as I got older, yeah, the family's doing good, young Riaz, and I'm doing good. How about yours as well? But when it came down to it, that's when I started having an understanding about life insurance, because if anything would have happened to me in my policy lapse, they're not going to pay out the premium, you know. And me being the protector and the provider of my family, that means if something happens to me, I'm not going to be able to take care of my family, especially for us as men who pay majority of the bills in the household. How would your wife and kids be able to live, you know, with no money? You know, very important, very important. Same applies to guys who, just have kids or baby mama, just the kids in general. Let's say your baby mama got remarried or something like that, or your ex-wife, she got remarried, divorced or something like that. Your kids still need to be taken care of. You know, even after 18, we always hear this, you know, taking care of your kids till they turn 18. Tamika Davis, what's going on? She shouting out to the chat. The crazy part is you never stop taking care of your kids. Literally never. It comes to the point when your child is 18, from 16 to about at least 25 to 30, that's at the most prime. I say from 17 to 30 might be almost the prime time in which your kids are, needing the most money, from 17 to 30. Because you got to understand, this about the time when your kids are getting to a point where they want to buy or rent an apartment, buy a house, buy a car, invest in something that they can have of their own. So this is going to be the opportune time where they're going to need you financially to help them, or giving them the information. And a lot of people, as parents, we just don't have that information. A lot of parents barely are able to pay their bills, more or less. Yeah, we're finishing college as well. More or less, they don't even have the information to, get their kids in the right direction. Some kids surpass their parents, where they come back and teach their parents things to keep them informed. Just as I'm telling you this information right here, there are some kids that are actually coming back, talking to their parents about getting life insurance, and putting them in a situation or position to obtain, you know, a level of generational wealth, you know. And just getting life insurance is just not generational wealth. You know, generational wealth is from next generation to next generation. That's generational wealth when you're exceeding more than two generations. When you're going into the third and fourth generation, shout out to Dame Dash. Dame Dash said he liked dealing with third generation millionaires. Third generation millionaires are the ones that don't flaunt their money, they just live. You know, if I want to buy a Gucci shirt, this and that, cool. But I'm not buying Gucci for the name, I'm buying it for the fabric. You know, if you're to the point where you're looking at a situation that can enhance your life, enhance your family, and like I said, keep it to a minimum. A lot of people generally get life insurance and they try to max it out. If you have the funds and you have to connect, by all means max it out to get the biggest payout. You know, a lot of people, shout out to Alonzo Hall, the All Star advisor. He has set me and my kids up pretty much to the point where when it comes down to it, my kids even have an IUL. You know, my thing of it was just getting the life insurance and putting it to a situation to be okay. But having my kids have an IUL as well as me, to a point where when they get older and they decide to have a family, they can enhance that policy for a greater good and a greater benefit. See, that's the thing. Jazzy, what's going on? I haven't seen you in a while. How's the little baby doing? How's the baby girl doing? How's she doing, Jazzy? Haven't seen you around in a minute. I hope everything's okay with you. Like I said, take it easy. Take the steps and just living in life. But nice to see you. But overall, when it comes down, Jessica in the building. I gotta go back and watch a video from Saturday. I seen that pop up. But overall, you want to have a perspective about life. And a lot of people, you know, we really generally don't have the answers because our parents hasn't, put us in a position. So, when it comes down to it, we're going off the bare minimum. If a lot of times we don't have all the information. Our parents don't have all the information. So instead of us, what's going on, Jay? Instead of us sitting out here and just going through the woods, going through the wilderness, not knowing anything, it's always going to. Sorry to hear that. That's sorry to hear that. And this is one of the biggest things where I was just talking about at the beginning, where to leave something for your kids is generally to, have that life insurance ready and available. I know we talked about it. I dropped a link if you want to just come up for a minute, Alonzo, for you.
Um, yeah, give me 1 second. I was in the middle of eating breakfast. Give me 1 second. Let
All
me
right,
finish
go
chewing.
go ahead, go ahead. And Wanda, how you doing? Wanda in the building. Shout out to Wanda. Wanda, I know it's cold now. I know you're gonna be doing your outside walk when it get warm up, but I've been missing your talks inside, because I can't really hit the link a lot of times and chat with you while I'm driving with the texting and stuff. But I try to go and look at some of those. It'd be pretty good conversation you be having over there. But when it comes down to it, for more or less, this is what I'm talking about right here. To where if something was to happen to me, I'm a truck driver. So if I'm driving the truck and I have a fatal accident, how are my kids gonna deal with it? How my wife are gonna cope? The best option for me is to have life insurance, to kind of bring full circle again back to life and make it whole. You know, what's going on,
Exactly.
for mama? What's going on? Go ahead.
What's going on? So that's absolutely correct. I wow, that's crazy. Just being jazzy. I was actually about to say something about car accidents. Um, and one of the things that people in my business fail with. So while we talk to you guys about life insurance for what if something happens and you die, what we don't do enough, and I want to apologize to you and your family for me not pushing the envelope more, but it becomes difficult because we're also salespeople. So we do push for another product, but often it puts people in a predicament where they're like, hey, this guy needs to make a sale. Maybe it's just a sale. But one of the things we don't talk about with life insurance is what if something happens and you live? Because, see, that happens a whole lot more than what if something happens and you die. And so I want to, everybody get out your notebooks, your pads, and your pens. I want to leave y'all with some questions to ask your financial professional, right? Whether that be me or somebody else. Hopefully, I'm gonna hope everybody is calling me, but maybe you got somebody you work with already, and that's fine. But you need to be armed with the right questions to ask. So, first of all, let's break down something because the number one question people always ask: term or whole life, what's better? I'm going to tell you all right now the best life insurance policy to have. Get your pens and paper ready. Okay? I'm going to wait 2 seconds so y'all can get your pens and paper ready. Okay? So, the best policy to have, life insurance policy to have, is one that's enforced at the time you need it. Because your family, if you do die, don't care if you had whole life, term life, index, universal, variable, universal. All they know is they got a check that's going to help them to continue to maintain and live their lifestyle. So the best type of life insurance policy to have is one that's enforced. Period. Okay. Next, you'll hear insurance agents and financial advisors, including myself, tell you all this wild, crazy, astronomical stuff about life insurance. Stop it. The first purpose of life insurance is to pass on a death benefit. Now, that's not the only purpose, and it's actually not the most important purpose, but it is the first purpose of life insurance. Don't let nobody tell you anything different, including me, because I talk about a whole lot of other stuff with life insurance, as opposed to the fact that it is the death benefit. But that's number one, just like she said, especially for men, right? There's Bible verses that say, a righteous man leaves an inheritance for his children's children. So we got to look at stuff like that, right? And an easy way to leave an inheritance is through life insurance for pennies on the dollar. I find it crazy. There's actually a meme right now floating on Facebook where they're like, I find it crazy that people are saying $100 a month for life insurance is expensive. Try getting $10,000 in 5 to 7 days for a funeral. Because see, that funeral director is going to be calling you. Excuse me, Mr. Jones, we need the money to bury your Aunt Sue. We're not going to bury her until you pay us. Ain't no pro bono cremations. We don't do this. Give me 1 second.
Fine. I mean, even with a situation where a lot of people don't take out loans for funerals, you know, GoFundMe's all the way down to fish fries. You know, we hear it all the time. A lot of people not having the money is the biggest detriment. You know, if anything was to happen, you know, they're here today, gone tomorrow. And a lot of people don't want to put up money for a family member. You know, it was a hassle, you know, when I heard about, you know, some people in our family passing and they just didn't have the money, even due to younger generation. You know, you have, oh, I'm gonna live forever. Kids dying at 26, dying at 25, dying at 18. You know, they're dying young due to being in the wrong place at the right. I mean, at the right time. This your time to just go in there and get you something to eat from the corner store, or you know, at a Wendy's or whatever. And some guy comes in randomly tries to shoot his girlfriend. You just so walking in the door, he gets scared and shoot you by mistake, then take off. No, nobody knows the circumstance. So it's like they always say, it's better to stay ready than to get ready. So life insurance is necessary.
Well, I'll tell you even further. So I had a crazy beginning to 2024. I have two uncles in their 60s who both had a stroke. I got a joke there, different strokes for different folks. But I got two uncles who both had a stroke. My mom-in-law had to have surgery on her knee. My aunt died, and my best friend's grandmother died, all within the last 2 weeks. Outside of my mom-in-law, none of the rest of them have life insurance. And the only reason my mom-in-law has life insurance, it's a small policy that she got from her job. It's not nearly enough to cover her final expenses or to leave us with anything, or to leave my wife with anything substantial, right? Especially with the debt that my mom-in-law has. That whole policy will be cleared out by the debt that she has, consumer debt. My aunt, she died, like I said, last week in the hospital, Wednesday. My best friend's grandmother actually died the same day, Wednesday. My two uncles, well, one of my uncle's daughters are now they want to call me and talk about life insurance for both their mother and father. Problem is, he had a stroke. Guess what he don't qualify for now? Traditional life insurance. Now, there are policies that he can get, like that Colonial Penn, $9.95 per unit, but those give you a maximum death benefit of maybe $35,000, and they're very expensive because they don't do any underwriting. They just say you have a pulse. Are you not in the hospital? Do you not have AIDS? And do you not have cancer? If you can't answer no to all of those, if you can't say I'm not in the hospital, which guess what? He's in the hospital right now because he's recovering from a stroke. So once he answers that, they won't give him the policy until he's well enough to be out of the hospital. Right? But now, enough about me. Let's go to what's going to help you guys. Right? Unfortunately, I deal with this all the time. So for me, especially getting into this industry, because my life was almost taken, I have a different outlook on things. But so, the first question you want to ask your agent, outside of, what type of policies are available, right? Do you offer whole life, term life, universal life, and index universal life? You need to ask them blatantly that. Because if you just ask what type of policies they have, they'll definitely tell you, oh, I got anything for you, right? Ask them specifically, hey, do you have whole life, term life, universal life, index universal life? Those are the 4 policies you need to concern yourself with. There are others, but for average Americans, unless you're a multi-millionaire, you don't need to worry about the other policies. They're cost prohibitive. Next thing is when they offer term, what are your term lengths, right? So how long do your term policies last? Most insurance companies have 1 year, 10 year, 15 year, 20, 25, and 30 year. But most companies will have 10 year, 20 year, and 30 year. A lot of companies have cut out the 1 year, and a lot of companies have cut out the 15 year. You may hear some say things like term to 95 or term to a certain age. Term to a certain age is basically 1 year term. What happens is after the 20 or 30 years, it automatically renews, and every year the price goes higher. So for example, if me, a 40-year-old man, buys a policy and it costs me $1,000 a year for $1 million death benefit, then when that 20 years is up and I'm 60, it's going to continue. But at 61, it's going to cost me $1,000 a month for that same $1 million death benefit. And then at 62, it's going to cost me $2,000 a month for that same $1 million death benefit. And at 63, it's going to cost me $3,000 a month. So it just keeps going up in price. Then you want to ask them, after you find out the length of term that is available to you, you want to find out if they offer something that's called convertible term, right? So the reason I'm talking about term insurance right now, because it's the easiest and lowest barrier to entry, right? But there was a study done by Penn State University that broke down 99% of term policies don't pay a death benefit. Now, I'd like to give most Americans credit as to the fact that the reason those policies don't pay out is because they outlive their term. But Penn State University, their study showed that it's because they don't pay their premium. They let it lapse. And because unlike whole life, there's no cash attached to term insurance, there's no safety net. You could have just not got paid Wednesday and your policy automatically drafts. And once that payment rejects, they cancel the policy. They don't give you no grace. Oh, you ain't make your payment, cancel. Right? And that may mess you up. So you want to ask also if your policy is what's called convertible. So convertibility is another reason why 99% of term policies don't pay out. You see, when I tell you things, I'm not just going to tell you that they are. I want to tell you why they are. So one major reason that 99% of term policies don't pay out is because they get converted. What is convertible? All policies have a convertibility option, including Primerica policies, because I know, especially in our community, we are rampant with Primerica agents. Primerica does not sell permanent life insurance, but because of their sales model, a lot of other carriers, major carriers, will fully accept a convertible policy from Primerica, and they'll convert it. So now what does convertibility mean? And ladies and gentlemen, I hope you got your notepads because I'm dropping gems. So convertibility is you have the option to convert your policy from term life to whole life. or universal life or index universal life. But you have the option to convert it and turn it from a term policy, either all or portion of it, from term life insurance to whole life insurance. Yes, it's going to be substantially more expensive for whole life insurance, but there's reasons why. But let's just break down that convertibility. So the way this works is, again, I'll use myself. $1 million policy, term policy, 10 years go by. I'm like, you know what? I want to convert some of that to whole life. Hey, how much is $250,000 worth of whole life? Oh, that's going to be $750 a month. Okay, I can afford it. So I'll take 250,000 of that term policy and turn that into whole life. The beauty of convertibility is generally you don't have to go through another medical exam. Okay, now let's also talk about medical exams, because unfortunately, people do things like don't want to take a medical exam and expect a good price. The reason they underwrite you or take you through a medical exam, you can actually get a better price when you go through something called fully underwritten, right? And on the spot, I'm glad you popped up, because I'm going to compare this to purchasing a home or a mortgage. When you go to
Let me
a
shout out
life,
about 3 people just came in. Malika
no doubt,
came
go
in
ahead.
on the spot, and J3 Farming. What's going on? Shout out to y'all. Oh yeah, I ain't say hey to Queena too.
Queena, what
Queena,
up?
what's going on?
And on the spot, Malika and Jags, what's good? So I'm going to use the buying a house analogy, right? Because there's no express underwriting to get a mortgage, right? When you go to buy a house, you got to let them go through all your information with a fine tooth comb. Why? Because they're on the hook for a substantial amount of money. Yet people think life insurance is just supposed to, look, I want to give you 4 pennies, and when I die, you guarantee to give me $1 million. That's not the way it works. Imagine if you went to the mortgage company and said, look, I don't want you looking at all my money and stuff. You see, I don't need you looking at my credit history and, my payment history and 2 years of my tax returns and a verification of my employment and making sure that my bank accounts don't go crazy. You see, I got an 800 credit score. Give me the money for the house. That's not how that works, sir or madam. We don't care that you have an 800 credit score. There's a deeper story into that, right? So that's the same thing when you're applying for life insurance, except we give you the option to come to us and say, hey, just check my credit score. You see it's 800, now give me that money. Well, that would be something called simplified underwriting or simplified issue. So again, you're going to ask the agent, right? Write this stuff down, ladies and gentlemen. What type of policies do you offer? Do you offer whole life, term life, universal life, right? With your term life, what are the term lengths? Are they convertible? Then I want you to ask them, what type of underwriting options do I have? Do you have something called guaranteed issue? So guaranteed issue again would be like those those commercials you see with Alex Trebek. Colonial Penn, $9.95. It's guaranteed issue. You can be on your deathbed and they'll give you the policy because they're going to make you pay $1,000 a month for a $3,000 death benefit. Right? So it's very, very, very overpriced because they know that most people who are getting that are going to die very soon. And if you're not going to die in 10 years, which you don't know, you end up overpaying for that policy. My grandmother got a Colonial Penn policy. She was paying $660 a year. She had that policy for 11 years. So she paid $6,600 into the policy. It was a cash value whole life policy. Do you know how much the death benefit was? She'd take a guess.
I say about 10,000.
That would have been nice. It was a $5,000 death benefit, right? So a lot of seniors get taken advantage of with what's called guaranteed issue. But you want to ask them, do you have a guaranteed issue product? Because a guaranteed issue product, you ain't going to take no health exams, but they price it accordingly. Do you have a simplified issue product? Simplified issue is more that scenario. Like I said, they're just going to take a look at your credit score, see you got an 800 credit score, and give you the policy. It's a little simpler than a fully underwritten policy. And then you want to say, do you have fully underwritten options? A fully underwritten option means that they're going to ask you, the insurance agent is going to ask you about 70 health questions. Do you have this? Do you have that? Do you have this? You ever had that? You smoke, you drink, you going to Mexico, this, that, and the third. Then they're going to have the company call you because they don't believe the agent asks those questions because the agent is a salesperson. And even when the agent works, quote unquote, for the company, because they're independent and a salesperson, the company they're against the company. They're actually working for you, the client, which is why it's probably best for you to work with an independent agent who has the option to bring you to different carriers. Now, every agent's going to get 1 to 3 carriers that they find their favorite, but you want to make sure that they have the option to have different carriers. So, again, fully underwritten, excuse me, means that they're going to, let me sip some water. It means that they're going to go through everything. They're going to have a nurse come. That nurse is going to take blood and urine. Depending on how much you're applying for, they're going to take your height and weight, maybe an EKG, depending on your age as well. But you're likely going to get the best possible price being fully underwritten. And you're less likely to be declined when you have a fully underwritten policy. Why? Because they can go dig deep into your health history and find out what's going on. Also, every insurance company, when you apply for life insurance, reports to this thing called the MIB, the Medical Information Bureau. So what happens is when you apply for them, especially if you get declined, it's like a high school boy who hit the popular cheerleader. He gonna tell all his home, yo, I hit that son, yo, I hit that son. So your name is now circulated around that school. Well, guess what? The insurance company runs and tells the Medical Information Bureau, yo, we hit that son, don't mess with that. Now, every single life insurance company in the country knows about you. So if you say, well, I didn't get accepted here, I'm going to go to the next company. The next company is going to go, hold on, let me just check with the MIB. Oh, nah, you slept with Alonzo. I ain't sleeping with you. So it's difficult to jump around. Now, there are different underwriting rules for different carriers, so you may still be able to be accepted, but you need to know these things because the better prepared you are, the better results you'll get. So I want to pause there and leave open for any questions somebody might have. Any questions in the chat at all?
One moment.
Mm-hmm. I could look too. I just realized that. Melissa said, yay, convertibility. Okay, so those are just a couple of things about term insurance. Now, I'm not done with term insurance, right? I just went through the underwriting. Because if you're going to absolutely go with a term policy, fine. because that may be what fits your needs at the time. But if you can, you want to find, and there's very few carriers who do this anymore because agents are starting to talk about it a lot. I think actually, as of January 30th, they're pulling this type of policy away from a lot of carriers. But there is something called ROP term. ROP means return of premium. Now, a lot of agents will explain it to you completely inaccurately, and they'll tell you that the insurance company is going to give you all your money back, which is not true. Because they don't give you all your money back. There's expenses and there's fees involved with term insurance too. Things like the cost of insurance, so on. Can that report work in your favor if you want to get another policy with another company where you don't have to get a physical? No, so the MIB report is something different than the physical. The MIB report is very similar to those HIPAA forms that you sign at the doctor, which is why it's very important when you go to the doctor. You're very selective about the information you give, because we get to see that, not the insurance agent, unless they go physically pick up your medical records, which I don't think they did that since like the 80s. But they actually take a look at the doctor's notes. So while you're sitting there, yeah, Dr. Johnson, I'm not taking my medicine, but that, and you know, I'm on this new yogurt diet. He's writing all that stuff down. That goes into your MIB report, because the Medical Information Bureau is also involved with the medical field. It would only make sense. And that's why you fill out those HIPAA forms. So things like health insurance, when they're talking about pre-existing conditions, health insurance is checking your medical records and the notes that the doctor writes. So little things like getting a prescription. If it's a drug you know you're not going to take, do not get that prescription filled, because that will cause a negative mark on your MIB. And when the insurance company looks into that, they're going to say, well, you took cloclaclasium. Why did you take cloclaclasium? This is for this kind of heart condition. You say, oh, I never took it. Well, you got it prescribed, so therefore you took it in their eyes. Let's see. We got Cosmology Bay in the building. Salute, bruv. Right? I'm super energetic all of a sudden, Sheed, so don't worry about it. I know we was talking earlier.
Yeah. That's why I was about to get ready to send you a text.
Nah, I'm totally fine, man. Listen, you know, this is my subject. I get passionate about this. I ain't get shot 5 times in front of my mother 3 days before Mother's Day for no reason. Right? But those are some of the things that we can actually learn, you know, how to get life insurance for ourselves better, right? Now, when you talk to someone like me and I'm talking about all these alternative concepts, it'll make a whole lot more sense when you understand, hey, Lonzo, I get, you know, you want me to go with all the flashy dashy stuff, but first and foremost, what is the most, you know, what's the number one purpose of life insurance? Again, if I say anything other than the number one purpose of life insurance is to leave a death benefit, run. Because that's the number one purpose of life insurance. Now, again, it's not the only purpose. It's not the most important purpose, but it is the number one purpose. Right? Like I said, there's purposes 2, 3, and 4. Hold on, let me turn off this Wi-Fi. Do plastic surgery? No, that's cosmetic. So yeah, if you get like a BBL or something, that won't. Well, it shouldn't affect things. I'll say I can't 1,000% say that it won't, because if it changes things like your height and weight, like recently, Guys are getting cosmetic surgery to increase their height, which that can change things, right? I wouldn't say plastic surgery, but things like liposuction can actually change because we also base life insurance on your build. So your build is your height and your weight. So we say, for a female who's 30 years old, 5'6" and 100 pounds, or she's gonna get priced differently than a female who's 30 years old, 5'6" and 200 pounds, because they have different builds, and we have these things called actuaries, which say, these particular situations or predicaments that a person can get into give them a higher or lower likelihood of dying from whatever. I hope that answers your question a little bit on the spot. That was a good one. That one threw me for a loop. I ain't never had a question like that before. Yeah. So, those are a couple of things when you're looking at term insurance, right? Like I said, you want to look for ROP, return of premium, but return of premium is not exactly how they say it. They don't give you all of the dollars you pay into the insurance policy back. Because I heard somebody who was like, oh yeah, if you get an ROP term and you pay $1,000 a year for 30 years, at the end, you're going to get $30,000 back. No, you're not going to get the whole $30,000 back. There are costs associated with the life insurance that the company takes out, and they will give you a portion. Now, they'll give you the majority of your premiums back. It's not like they're going to say, okay, you paid $30,000, we're going to give you, $10,000 back, which is still better than traditional term because you get nothing, but they will give you a substantial amount back. Now, I can't really tell you exactly how much because different carriers have different provisions, but they will give you a certain amount of your money back. Let's see, it looks like we got another question in there. No, she was just doing the thumbs up. So yeah, now let's look at whole life insurance, right? Because all whole life insurance is not built the same. So there will be companies like Senior Life, what's the other one? Lincoln Heritage, and a lot of these like Lincoln Heritage. You know what? I'm not going to do that because technically it's illegal for me to speak negative about a company. Outside of Primerica, everybody speaks negative about Primerica, but they offer a maximum death benefit, no matter what age you are, of $35,000. Those are going to be your simplified or guaranteed issue policies, right? Where it's just, I got a pulse and I put in an application and you're probably going to get the policy. But then you also have to look at what's called financial strength of these companies. Companies with a weaker financial strength have a less likelihood of paying out their death benefits. So I'm going to pick on Primerica again because I have a love-hate relationship with them. So Primerica does not have one of the strongest financial strengths in the country as far as companies, but they do pay out their death benefits when they come across. But the thing is, they are like third tier when it comes to financial strength. Anything with a financial strength less than Primerica, you need to run far away from. Now, how can you get the financial strength of a company? Well, you can ask your insurance agent, hey, can you send me something called the annual report from your company? If they don't know what that is, run, right? Now, they might not be able to get it to you immediately. They may, hey, listen, you're going to have to give me a little while. I had to go to, my email and get it. But it's really easy. Just the same way they can get you a pamphlet that tells you why to buy the insurance from them, they can go into their back office, type in annual report, and every company will give you their annual report. Just like when people are telling you to quote unquote invest, right? You need to get the prospectus. And what is a prospectus when it comes to investing? See, I don't talk investment stuff too much because I actually have my licenses, and you can lose your licenses for talking about this stuff online. But a prospectus is basically a document that breaks down how's it going, boss? It breaks down the past performance and future projected performance of said investment vehicle. So if anybody offers you even something as a mutual fund, hey, can I see the prospectus? If they don't know what that is, they are trying to royally ream you. But let's get back to life insurance. So you want to ask for something called the annual report. Hey, can I get a look at the annual report? Oh, what do you need that for? Just because I'd like to see it, and it's public information, and you're legally, you have to give it to me if I ask for it. Another thing, and this is funny, is actually by law that the financial representative, whether they're an investment broker or a life insurance agent, has to tell you, only if you ask, but they have to tell you how they get paid. Now, they don't have to tell you how much they get paid, but they too have to tell you how they get paid. So, for example, I am a fee-based advisor. So that means that first, before you can sit down and talk to me, I'm going to charge you a fee up front. And then, because I'm fee-based, I also get paid a commission by the carrier, not by you, by the carrier of what you pay into the policy for the year. So, for example, the industry average is 50%, right? Now, with all these other agents, if they're with FFL, World Financial Group, People Helping People, they're getting industry average of 90% of what you pay for the year. So if you pay $1,000 a year off of that policy, they're going to get 90% of that, or $900. Now, that does not come from your policy. That does not come from your pocket. This is why insurance companies love when you buy term, because they end up being able to make their money back really fast, because most people pay into term. They don't have to worry about a separate account. It's pure profit. They never have to pay out a death benefit because most people lapse their policy or outlive them. Let's see. I think we got another question in here. Okay. So you want to ask for that annual report, and you want to ask how they get paid. Please, 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 ladies and gentlemen, stop asking this question. I had a guy ask me this question the other day at the bank, and I've gotten to a point in my career where I will walk away from people. Because, like I said, industry average is 50%. So, for example, a lot of my clients are paying, a lot of my newer clients are paying tens of thousands. Like, one of my bigger clients last year put $70,000 a year into his life insurance policy. So for that one guy, I made most people's annual salary, right? He pays 70 grand. That's 35 grand in my pocket.
Thank you.
You're welcome. All right. Now, there's a lot that goes into that because I got to service him. But you don't see me diminishing people like Sheed, who are my client. You know why I actually prefer people like Sheed, who are my client? Because he did something that is way bigger to me than this other guy. This other guy just put a bunch of money away, but he has a bunch of money. He makes $1 million a year. What Sheed did was Sheed gave me the trust of his family. He said, listen, I'm going to trust you with the lives of my children, right? So that is immense, because not only did he trust me with his life, but he trusted me with the life of his children. Do you know how hard that is, especially in the Black community, for somebody to trust you with their kids' lives? Right? So that's
I got a
another.
question in the chat.
Okay. What should people look for as far as reviewing the annual report? So that, again, that's where you're looking for the financial strength. So you want to look at things like what their rating is from Moody's, Standard and Poor's, and AM Best, right? So, for example, when President Obama was the president of the country, Moody's downrated the country's credit from, I think it was AAA plus to just AAA, right? And I can't recall the exact rating system because each one of the financial rating companies has a different rating. But you want to see that they're, AAA, AAA plus, and things like that. You don't want them to be. Wow, it's so cold. I got me coughing out here. You don't want them to be smaller ratings than that. Good morning. Because the higher the rating, the stronger the company is, right? Now, another thing with whole life, again, you've got the final expense, which is the $9.95 plan. That's going to be guaranteed issue. They have simplified issue and fully underwritten, right? How much should you put in the current policy? How much can you afford? And then it depends on what you're looking for your policy to do, right? So I'll actually put it like this, because that is actually a great question, Queena. Because the specific dollar amount doesn't always matter, because you pay for life insurance with your age and your health. Now, what matters is the amount of death benefit. And you never want to just go and say, hey, how much is $100,000 death benefit? The reason being is that might not be substantial enough to cover your insurance needs, right? Let's look at it. In our community, we say we want generational wealth. If you go to Google, Google will tell you that a generation is between 20 and 30 years. The average annual income of an American, what's going on, boss, is $50,000. So if you do 50,000 times 20, that's $1 million death benefit. So anything less than that is vastly underinsuring your family, because you're not leaving 20 years of just your income, right? Which would just be actually generationally just making it, right? Because most people who making 50 grand a year are just making it. So leaving your family $1 million is just generationally just making it, right? It's not even generational wealth.
Barely
Go ahead,
scratching the
She.
surface. Now, just gonna say real quick, you barely scratching the surface, because in any case, like I was talking about, whether it be male or female, but for the most cases upon men who actually wanting to take care of their family and leave some money, 50,000 is sustainable. You got to look at the price. If your income comes out of the household, what bills do you pay? That's why Kevin would always ask women, what bills do you want to pay? Do you want to work? Because those are the substantial things that you're going to need in reasoning, to where if she works, then she'll have some money, but losing the deficit of the man's money is a big part. That's why I, kind of more or less push it upon men. I know with women, I tell them to get life insurance. My wife, I think she has like a small policy, but me, I have the bulk policy for the whole family in general. But go ahead, Lonzo.
Yep. So again, that's like you said, that's scratching the surface barely, right? Because You're making it so your family is generationally just making it, but it's better than leaving them to start back from zero, which happens in our community all the time. So the next thing is, don't leave it upon the insurance agent to come up with the number, because they're going to come up with a big number, because they get paid based on how much you pay. So I do this with most all my clients. I sit down, I go through the numbers, and I say, well, I recommend you get this much. But, Sheed, I'm a salesperson, so I stand to make money off of this. So don't just listen to me. Do me a favor. If I'm on the Zoom with you, I'll go to the website myself, but I tell people to go to the website on their own. The website is www.lifehappens.org. You go there and you go to the Human Life Value Calculator. It'll have some numbers for you to punch in. You'll punch in your numbers and it will calculate how much life insurance you have. Most of the time, I don't like to work with clients who don't have any life insurance. If you don't have any life insurance before you see me, it's very difficult for me to get you to grasp the need for life insurance. But most people who already have life insurance generally don't have enough. I have people who come to me all the time. How much is $250,000 worth of life insurance? And I'm like, how did you come up with that number? And often they're not aware of how they came up with that number. It's just, well, I ain't never held $250,000 in my hand at one time, so I figure that's going to be enough. Right? It's not. Right? And coming up with that number, the thing about insurance is it's adjustable in price, right? So depending on the type of policy you have, there's all different types of ways you can finagle the price to carry a policy. That's why you can have those things where they're like, oh, term to 90. Because what they do is they give you a whole life policy that they do what's called underfund. And so it will last for, till you're 95. And then at 95, it's done. So basically, it's a whole life policy that's not building any cash value. Right? But then you want to ask the agent this. Do you have participating whole life? Right? Now, what is a participating whole life policy? Well, participating whole life means the insurance company is willing to pay you a dividend on your life insurance. Yes, life insurance does pay dividends, but the policy has to be participating, meaning that it has to, I'm getting on the elevator if I break up, y'all. It has to, when the company is profitable, they will share some of that profit with its policyholders. Now, most of the time, and a lot of agents have no clue how to set this up. I grow so tired of seeing all these agents. I got a team of 100 agents and I got my own agency, and they only been in the business 4 years. They don't know enough to actually teach you anything, because they don't know that with a participating policy, there are actually something called dividend options. Now, the default option that most agents are going to select for you without even telling you, because most of the time they don't know, is going to be something called RPU, or reduce paid up insurance. So what happens is the insurance company pays a dividend, and then what they do is they just take that dividend and they buy however much death benefit that $100 dividend will buy for you. So your death benefit then goes up. You'd be like, oh, my death benefit was $50,000. Now it's $55,000. That's because they bought $5,000 worth of life insurance for you without you knowing with your dividend, right? You can actually get your dividend paid out to you in cash. Do I suggest that? No, generally I recommend staying with the paid up editions. Just because it makes things a lot easier and you don't have to end up paying taxes on dividends and right? But you want to find out if your policy is participating and if it pays dividends. So you can ask, hey, do you have participating policies? And thank you, Sheep, for bringing me up here because I like to run my mouth. Um, so
No
you want to
problem.
find
No
out
problem.
if they have a participating policy, right? What's going on, Christine? I'll stop if you want to give some shout outs.
Already shouted out Christine and M Mills. What's going on? Shout out to you. Hit the like button coming on in. And as well, Alonzo has his channel as well. If anybody, I'm gonna drop the link to his channel. Alonzo, the All-Star Advisor, you can sub to him as well and get this good information.
No doubt. Thank you. So, a lot of this stuff, it takes years and years and years or a certain type of experience. I do have skewed experience because the state of New York is the financial capital of the world. And, my first office was on 100 Broadway. You'd come out, take two lefts, and the New York Stock Exchange was right there. I ran into people like Jim Cramer or Mad Money, buy, sell, all the time. I used to drink coffee with him every Wednesday, right? Um, so these are things that, again, you're gonna want to ask that financial rep. So let's see. I should have written down some of these things I told y'all to ask. But again, do they sell term, permanent, and universal, or term, whole life, and universal life? Do they do the policies participate? What type of term policy do you have? What are my underwriting options? Do you have guaranteed issue, simplified issue, and fully underwritten? Again, most people should go for fully underwritten. Unless you've got, absolute terrible health and you need something that's guaranteed issue, then you'll go for guaranteed issue. Also, guaranteed issue, aka final expense, is a form of whole life insurance. Like I said, the one that my grandmother got from Colonial Penn. Those are whole life insurance policies. They actually do build cash value, but they're set up to not build any substantial cash because they're very expensive. And because of the ages of people, they set it up so in most states you can't get a guaranteed issue policy until you're 45 in certain states, but most states it's between 50 and 85, right? And this is why you'll see while grandma's watching The Price is Right, the Colonial Penn commercial comes on, right? Mutual of Omaha is another company that offers one of those policies. I used to sell a lot of guaranteed issue. I would go to the projects in Harlem and the Bronx and go to the old grandmothers and sell them a $25,000 policy. Boom. And then they'd be like, "Ooh, I got, some life insurance. I'm good." Right? Those things aren't exactly a beneficial whole life policy for you, the consumer. Now, when you're looking at, again, whole life or permanent insurance, and this is why people also prefer term insurance, because they don't want to be mortgaged on their life insurance. See, mortgage, everybody runs to go get a mortgage and they don't understand the terminology. The literal definition of the word mortgage is payment till death, meaning you will be paying this until you die. And most people, that's what ends up happening with a mortgage, because generally you'll start with an FHA loan and you'll refinance after 10 years, meaning you will restart the loan. And so if you're 40 when you first buy your house, 10 years goes by, you're 50, now you restart the loan, you've just given yourself an obligation for an additional 30 years. Now, when you have life insurance, people think you have to pay for whole life insurance in perpetuity or for your whole life, which is untrue. So you also want to ask the insurance agent, "Hey, Alonzo, on your permanent policies, do you have limited pay options?"
Well, what's limited pay? Nah, you got to pay for whole life for your whole life. Run away. A limited pay option means that you are paying the policy for a limited amount of years, but it is still a whole life policy. So I generally try to set most of my clients up with a limited pay. Now, situations do arise where I have to give them, a traditional whole life where you're paying for it for your whole life. But I don't think you should pay for whole life insurance for your whole life. I don't think anybody should be paying for life insurance for their whole life. I think you should pay for it for maybe 20 years. And then after that, you should stop paying. Give me 1 second. My wife's calling. Hold on.
Yeah, and that's for the most part what people, when we have our talks, being able to pay for your life insurance and just in general, all the time, you look at different options. With paying for that life insurance, like you said, limited pay, after you pay for a 30 year, just like you pay for a term, and you have to constantly keep paying into that term, you know, thousands upon thousands each month. If you have a universal or whole life, once you're finished paying into the policy, you know, after a 30-year limit, that policy will start in return. Alonzo's the more professional on this, but you can get to a point where your policy starts paying you, you know, but I'm not giving out all the financial advice. You have to talk to your financial advisor, which I have mine online, so we can, also get out the more information because, like I said, this is a lack of knowledge. People not knowing, asking Alonzo this question with him on the line, he can better suit this and help me out to understand, like, is this policy giving me the best option, you know, in general? Am I gonna, have this policy, like you say, for the rest of my life? I gotta pay $600, $500 for the rest of my life up into my elder years, and that's the more or less the general where it hurts a lot of older people, not properly preparing for retirement. You know, say the least, when you have a job and you're making a lot of money, you're able to pay all these bills, and in most cases, most people can't retire due to not, proper planning, for retirement. You have a little money here.
Oh, they got him. All right, I'm back. I don't know if y'all can hear me.
When it comes, go ahead. Yeah.
No, go ahead, she. You was talking. Keep cooking.
I was gonna say this, pretty much say I have, you're here and I could talk to you about this. After I'm paying into my policy for 30 years and I have a whole life and it's set to a 30-year, you know, do I continue paying after those 30 years?
No. So the way it works is, and if I'm not mistaken, I know the carrier that you're with. There's a great carrier, by the way. Outside of me, he has life insurance. He had life insurance before he came to me, which made our interaction all the more easier. But what happens is at the end of that 30 years, you get to wipe your hands. Now, here's the cool thing. You're still alive. That policy still builds cash value too. So even though you're not paying into it, it still builds cash value as you continue to live. There's also different riders and options and policies. Like I rarely talk about different riders, but you have like one of my favorite riders is called the GLIR or Guaranteed Lifetime Income Rider. What is that? Well, that shows that when you hit a certain age, most companies have it, and they require you to have the policy for at least 10 years. And then after 10 years, once you reach it, let's say you got a $100,000 policy, and all you got to do is reach, $22,000 worth of cash value in that policy and have had that policy for 10 years. At that point, you can actually start receiving a income tax free lifetime income. You won't have to report it as income on your taxes. You don't have to pick it up or nothing like that because it's fully tax free. Right? So that beats the pants off of something like a 401k that ends up being tax deferred now, but you pay double tax because you pay taxes on the principal as if it's ordinary income tax, and you pay capital gains, right? So those are just a few different variations. And again, these are options that are available to you through your life insurance. But again, you must realize purpose number one of life insurance is what, ladies and gentlemen? The death benefit. Purpose number two is likely going to be wealth creation, right? So this is why I implore people to be careful about investing, because if you're investing, especially in stocks, and you think that investing is going to make you money or get you rich, you're absolutely mistaken. Rich people go into the stock market not to get money. They go into the stock market because they have money. And what they want to do is preserve capital, right? And so what they do is they say, well, instead of me putting this money in a high interest savings account that's going to be eaten by inflation, I'll put it in the stock market. And then at a historical average of 10%, then there you go. I'll beat inflation, which right now inflation is at what, 8%? So you're barely beating inflation, but you're just basically hedging against inflation. But for us, the average American who can't actually afford to invest, because investment is not done in increments, it's done in lump sums, tens of thousands of dollars at a time. When I was a stockbroker at EJ Sterling, for us new stockbrokers, they told us when you're first trying to get a client, drop your pants. Tell them you will do the first trade, either 100 shares or $10,000, whichever is less. Well, $10,000 or 100 shares, right? If the 100 shares doesn't reach $10,000, then the minimum investment would be $10,000, right? But there's still all these fees that go into investing and variables, right? So the reason that I don't like traditional whole life insurance and I don't like term insurance, and again, this is my personal feelings about it. I think again that the best life insurance policy to have is one that's enforced when you need it. But in my opinion, I prefer indexed universal life insurance. Right now, there's different types of universal life insurance. You have traditional universal life insurance, indexed universal life insurance, and variable universal life insurance. In order to do variable universal life insurance, your insurance agent has to have their securities license. So because variable universal life insurance is exactly that. It's everything is subject to the market, which is why I don't like variable universal life insurance either. But universal life insurance offers flexibility that whole life insurance does not. So what do I mean by that? Well, let's look at that cash value and how whole life insurance robs you, the client, of your cash value. So you get a policy, you get $100,000 policy, and you hold it for 20 years and you build up $50,000 worth of cash value. And lo and behold, you get hit by a bus. Well, the life insurance company takes $50,000 of your money, because that's the cash value built up, and $50,000 of their money, and then they give your family $100,000. And while that's cool, because that's what you paid for, was to get your family $100,000, you also built up 50,000 separate dollars. So the company only gave up 50,000 of their own dollars. With universal life insurance, if it's properly structured, you have the option of what's called an increasing death benefit. So what does that mean? Same scenario. You get a $100,000 policy. You live for 20 years, build up $50,000 worth of cash value, get hit by a bus and die. The insurance company now has to take $50,000 of the cash that you built up and $100,000 of their own money, because that's what they're contractually obligated to, and give your family $150,000. Right? Now, that's a little bit more beneficial for your family and you, the client, because you actually saved that money and put that money in there and built the cash value up. Again, it has to be properly set up with an increasing death benefit, which a lot of agents don't do. Hold on, guys, I got another call coming.
Yeah, that's even in most cases. What's going on, Sweet Thumb in the building? Even in most cases where a lot of people don't look at the benefits of dealing with life insurance is when you sit there and you're dealing with the different policies. That's why it was so easy for me and Lonzo to kind of work with our policies and get things established because, like I said, I had this, prior knowledge dealing with my great grandmother, not my grandmother, not my mother, but my great grandmother, because her thing was you don't want to be a burden to no one when you pass. So overall, her thing was to get everybody established some form of life insurance and not to be a burden when you pass, to actually leave everybody else with the benefit of taking care of you, worrying about, your, being buried and the funeral arrangements and everything else as well. But for the most part, though, when it comes down to it, you know, getting set up with the proper agent, do help. And when I talked to Alonzo, me and Alonzo met online. You know, Post been sitting up here going to meet up with him in New York when he had his picnic up in New York and Connecticut. Never had a chance to, but we're gonna go ahead and set this up where I'm gonna end up going to Connecticut or he's coming down to Atlanta, whatever so often. But at the same time, when it come down to that, this is a guy I met online. You know, all the knowledge he was giving me, and now Alonzo might talk about this, but I'm gonna be brief about it. When we had the policy and we were talking about, setting up the policy, my thing of it was doing the initial, what's going on, boss lady? Doing the initial talk. The first thing I said was, okay, what are your options? What are you offering? And then after he gave me the options and ran out, the prices and everything that I can pay, just like he said, I made my decision on, okay, well, I'm gonna go with this one. I might not go with this one. Let me look into this one, do a little more research. And the biggest thing with me was when I was ready to go, he was under the assumption of me just not even, getting the policy offhand. And my thing was, I'm ready to go now. Why would I call you and not go ahead and set up things? And that makes things even sweeter for him because, him as a salesman, this is the whole thing. The pitch, just like fishing. You throw out your hook and you wait for a fish to catch the line. That was the thing. He didn't even have to go fishing. All he had to do was just take the fishing hook and the equipment, everything, set it up on the bank, and then the fish came right up to the bay and said, "Let's go." And that's kind of what I did with my policy with him was went on ahead and just set up to the point. You're gonna like Boss Lady. Boss Lady leads her channel. She does a lot of hauls, focus, on health and everything. Shout out to her. But basically, when it comes down to it, that's the thing with a lot of financial advisors. You know, they spend a lot of time. It's just like agents who show houses. They spend a lot of time in prepping and getting paperwork done for a lot of people to even not even keep their policies or not even just get a policy from the jump. So I take this serious when I actually initially reached out to him because I was ready to buy. I did all my research, did all my checking on Alonzo. Like I said, I never met this guy. So for me to actually, like he said, and trust my kids, and everything with him as well, that's a great thing for me to have an understanding who this guy is and setting up my policies. Like I said, I was ready to go off the rip.
Absolutely. Actually, he surprised me. I was like, all right, so after this, you probably want to think about it. And he was like, what you mean think about it? I'm ready to go right now. I was like, I was stunned because I'm very used to, I do give a lot of information. And sometimes for often people, that ends up being information overload, which is why a lot of agents try to keep it as simple as possible, right? The problem with keeping it too simple is it may not serve your purpose, right? So now, like, If On the Spot is still here, right? You're a realtor, right? So for the most part, you might just send your clients to an insurance agent after you close so that they could get a 30-year term to, hey, if I die, the mortgage is paid off. But what happens to all those clients that come to you that are not uh, qualified credit wise? And they don't have the liquidity of a down payment, and maybe they can't qualify for programs like NACA or some other down payment assistance, right? Well, there's something called a collateral assignment, right? So you would say, hey, I know I'm a realtor and it's probably going to take you 2 years to fix up your credit. So while you're at it, go see if you qualify for a whole life insurance policy, right? And build the cash value in that whole life insurance policy. Because then you don't have to worry about the mortgage banker worrying about when you're approved for the loan. If you put $2,000 in your bank account or pull $2,000 from your bank account, that now changes their numbers on your mortgage. I also used to sell real estate in probably one of the most popular markets in the country, New York City. And they would go, hey, listen, because I got approved for $1 million in 2017, me and my wife, for a house. We never closed on it because I couldn't afford $60,000 a year in mortgage payments. It was $5,000 a month. It was just too expensive for me. So the thing is, when we got approved, I had gotten a commission check and I had put it in my wife's account to bolster what our down payment looked like. And then the mortgage banker was like, yo, what are you doing? Now I have to reevaluate you because you put more money in, right? Well, if you have a cash value life insurance policy, let's say you have a $500,000 policy and you had it in force for at least 3 years. This has to be a whole life policy. Technically, I would do it with a universal, but I should say permanent policy, right? So now you've built up a couple $1,000s of cash value, but you also have the death benefit of $500,000, and you have a policy that's been in force for at least 3 years. So the mortgage company knows that, unlike with term, where term, life insurance adds to your net worth too. So you want to be a millionaire, I'll make you a millionaire overnight, buy $1 million life insurance policy, boom, you're a millionaire, right? But you now have this $500,000 life insurance policy and you're going for a $250,000 house. Well, the way that they put together the way they put together a mortgage, or they collateralize a mortgage, is with the property, the physical property, right? And as opposed to using the physical property for collateral, you can use the life insurance policy for collateral. So now that life insurance policy would be what you call assigned to the mortgage company. And as your mortgage balance goes down, the amount of death benefit assigned to them goes down. Now, the thing is, you'd be like, okay, well, I have to die for them to get that. No, you don't. If you have a cash value life insurance policy and you screw up on your mortgage, because the house is not collateralized for that loan, they can't then go and foreclose on your home. What they would do is foreclose on your life insurance. So they would cancel the life insurance policy. And let's say you got, $100,000 of cash value in that life insurance policy, and you owe the mortgage company $150,000. Well, they're going to cancel that life insurance policy. So you no longer have life insurance, but they're not going to take your house. They're going to take that $100,000 out of that life insurance as payment. And then you'll just be left with the deficiency like a car repo. So you'll still owe them the other $50,000, but you won't owe them $150,000. Right? And that's where you hear like a lot of this stuff about infinite banking and blah, 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 blah. But all that is flashy terms, and that's really expensive, right? The reason I say that is because in order for it to actually work, you actually have to spend the money, right? Now, If you are again in real estate, a cash value life insurance illustration is literally the exact same thing as an amortization schedule, right? So I want everybody to go to Google and find out what an amortization schedule, AMORTIZATION schedule is. Literally what that is it shows you the payments on a loan. Generally it's used for mortgages. So you would say January 1st, 2024, I put down X amount of dollars, and by January 1st, 2034, I paid this much in principal and this much in interest. Just so you know, with a mortgage, the first about 15 years goes directly to your interest, not to the mortgage. You pay your interest back first before your principal on mortgages. So you end up paying 3 times what you borrowed back, right? But if you utilize things like life insurance, you don't have to worry about that. Again, there's paperwork and documentation that you need for that, but those are things. Also, you want to find out from the insurance agent, do you have a single premium option? Because you could pay for your life insurance, your whole life insurance policy, in one payment. You could just come say, hey, Alonzo, look, I got $25,000. I'm 40 years old. I don't want to worry about this ever again in payments and blah, blah, blah. I just want to slap down this $25,000 and not worry about it ever again. Now, it might not get you a huge policy, but it will get you a policy, right? But I actually got to hop off in a few minutes myself, because I got an appointment in a few at 9:30, so I want to get ready for that. Oh, excuse me. And I want to try and close my eyes for 10 minutes.
Yeah, I told you need about at least 30 power.
Yeah,
Yeah,
yeah.
but
It just caught up to me.
yeah. Well, okay, that's cool because I was going ahead, like I said, I'm drop out too. Shout out to the word 9% in the building. What's going on with you? You know, and Jig back in the building. The thing is, with me having this discussion on Money Monday, and I'm gonna start orchestrating my channel. Shout out to a couple of people, pretty much swoop like me. Shout out to her and her channel. We had a discussion on her channel, and it gave me a little more of a light in the direction of building in my channel. Giving the information and also letting people have fun as well. So I'm gonna start changing up the schedule to where I'm gonna still give the information, but more or less giving time to people to have fun as well. Because shout out to the last winners, Underrated Darkness, Anne Marie Cooking. She changed her name. I know it's Anne Marie's Cooking and something, and then most of all, Wellness with Frugal Mama. Those were my 3 winners last time when I did my giveaway. I gave out $10 cash apps. Also gave out a lapel mic for podcasting or doing interviews, and I gave out a motion sensor for us with the camera that you put your camera on a tripod, and the camera, your phone actually moves with your sensor of you moving around and exercising, doing things. So I'm gonna be giving more prizes away as well. Plus, going into the Soil Family meetup, because I do a little gardening, even though I don't only grew anything but tomatoes as of right about now. But shout out to the people in the Soil Family Gardening community. And Miss T's about to go live, so I'm actually about to go over there. And if you wait about 5 minutes or so, I'm gonna be streaming her channel on mine as well for people to go over there to her platform, and I'll be dropping her link as well. But shout out to everybody in the building. Yep, shout out to you, Frugal Mama. Hey, you was on it. You pretty much hit the score on everything far as my channel, what I talk about, what I try to encourage people to do. So shout out to you, great listener, great learning. You know, hey, proof is in the pudding. That's why you won majority of the prizes. Shout out to Miss Frugal in the building as well. You know, everybody, have a great day. And you know what I always say when I end my channel? We here and we gone. Shout out to everyone. Like I said, go ahead and, as you're coming in or you're getting ready to leave as well, go ahead and look at other people's channels. I'm gonna give a few minutes for you to go ahead, and if you're not subbed to anybody, go ahead and sub to their channel. Go ahead and look at other people's channel. Everybody in here pretty much has a wrench, and you go. Once again, shout out to everybody. We here. I always say we gone.